Hello, hello. Hello. Can I get a sound check in the Zoom chat? Fix this mic here. Sound check in the YouTube chat, Zoom chat. How's it going, everybody? I think it's all good now. Mic check good? All right, cool, cool. How's everybody doing tonight? It is currently Thursday morning, January 14th, 2:15 a.m. Eastern. German market open coming to pre-London hours. We are going to be doing some intraday and scalp trade idea analysis on XAUUSD, GBPJPY, EURUSD, GBPUSD, as well as US30. And after I share that analysis, sorry, after I share that analysis and we got our trade ideas set, you guys can also send any charts or any pairs that you guys want to get analyzed, and we can take a look at that as well. So for those of you who are new to the stream, you have the live breaking news headlines to the left. I'm good. I'm good. Thanks for asking. Carl, no sound? What about now? Sound better everywhere? Should be good. Okay. I'm just waiting for like 100 people to join just so we can start the analysis if people don't have too many questions after. But for those of you who are new, this is an educational stream where we do analysis across different currency pairs, commodities, indexes, even sometimes crypto. Okay. We look for intraday and scalp trade ideas based on various fundamental and technical concepts. You guys can feel free to ask any questions about fundamentals or technicals, any trade ideas, analysis, as well as anything else. Don't forget about all the free Capital Hungry resources, such as the Capital Hungry free Telegram analysis channel, the YouTube channel, and the Twitter feed. So before we jump into it there, make sure you send the Capital Hungry Twitter feed a follow where you can get all of these news headlines throughout the day, even when I'm not streaming. The Capital Hungry YouTube channel itself, tons of great resources, webinars, and educational content. And the Capital Hungry free Telegram analysis channel, which has been sharing financial market analysis since early 2019 across different pairs and everything else. So make sure you check out all of those free resources. Some key fundamental points to focus on is that there is still an active debate around the legislation process of Brexit that started on January 11th and is still currently running. We haven't seen any really important headlines regarding that yet, but that is something we should keep an eye out for. We have the potential for another $2 trillion US stimulus or an increase in the US stimulus, which is continuing to bring some continued market optimism, giving the US dollar a short term bounce from its 6 year lows, as that is a positive for the US economy in the short and long term. This is one of the reasons why gold had that impulsive move overnight to revisit those lows. We have continued global talks of vaccine distribution and rollout, which is also keeping the markets fairly optimistic. And we have a few new virus variants around the world, bringing some short term bringing some short term market fear, but it isn't having too much of an impact on the overall optimism or shaking out the and confident buyers out of the stock market or out of our risk currency versus safe haven pairs. No idea how the majority sees the vaccine as a good thing. Yeah, I agree with you. I'm personally not like pro vaccine or vaccine advocate. I'm just going by the financial market impact, where just those vaccine talks overall, and ever since they first came into the scene after the coronavirus fear got priced in, it starts to show signs of economic recovery and it starts to take away from the fear of the COVID virus, just from like a mass standpoint. But obviously, we all have our individual opinions of the vaccine and its impact. So you get what I'm saying? Some of the economic events tonight, we already had a flash impact report of the Germany GDP a bit ago. It was just on forecast, but I think it got rescheduled. We're supposed to have the ECB monetary policy statement at 7:30 a.m. Eastern, but that's a tentative. And the US initial jobless claims report at 8:30 a.m. Eastern, and then Jerome Powell is set to speak in later in New York afternoon. Don't forget that yes, our primary don't forget that yes, our goal through these streams is to do analysis, provide value, and attempt to make money in the markets, but our primary goal is protecting our capital and surviving the markets and focusing on the risk management. Okay, so now that we got that all out of the way, just to quickly look at investor confidence and an investor bias to start out with, you can see that through the last few sessions, global equities, even though some regions have started to range or consolidate or show some signs of exhaustion, overall, the global stock markets, whatever region you're looking at, are still extremely bullish, which is showing us that investor confidence is still very high. When investor confidence is high and that greed train is running, you can use this sentiment to understand that your safe haven currencies, such as the US dollar, the Japanese yen, the Swiss franc, for example, other indicators such as the volatility index are going to be relatively weak, while your risk currencies such as GBP, Euro, AUD, NZD, CAD are going to be stronger during these optimistic times. So just for a quick view, when we're looking at the market and you're looking at these various regions across the world, you can see that the global stock markets are still very bullish in intraday structure and price action, showing us that that investor confidence is still very high. One thing we want to look at here is, yes, the US dollar is having a cap bounce from its 6-year lows. But when we're looking at our safe haven currencies and you're looking at the volatility index to show you the fear and greed sentiment within North American markets, you can see that the volatility index is still relatively flat and failing to break previous highs and coming back to revisit these historical lows. The Japanese yen is relatively bearish, failing to break its 97 highs. And even though the US dollar, this is just on the 30-minute chart, is having a bit of a cap bounce from its 6-year lows peaked and the start of a new fiscal year, you can see overall the US dollar has been extremely bearish since March, ever since the Fed started that mass printing and inflation of the dollar. And we've had that optimistic run since, where global equity markets after their crash have been bullish ever since that economic reset. So we're going to keep an eye on the US dollar overnight on the intraday charts, because it's going to tell us a lot over London and New York session, where if we see the US dollar actively overnight continue bearish and come down to revisit these previous lows, this will show us that our safe haven currencies are still seeing money coming out of it, and we're still seeing a higher probability of money going into equities and risk currencies, and we'll have a higher probability of looking for our GU, GJ, Euro USD, US30 buys, and then looking at gold structure to see if we have any potential for more optimistic sells, but keeping in mind the market structure. If the US dollar continues up overnight and we have that short-term US dollar strength, and we instead go up to revisit these previous highs and continue this cap bounce from the 6-year lows, then obviously when we're looking at pairs like GBPUSD or Euro USD, there's going to be a higher potential. We're going to see deeper pullbacks from these intraday and previous highs that have been created on these pairs, and we're going to see downside moves overnight through London session and through New York session. So good idea to keep in mind and look at the price action of the dollar index alone, just because it tells you a lot of the movement of money throughout the night in the markets and that overall optimistic or fear sentiment. And we can still see through the last few sessions that JPY is just playing in this range, but still failing to break previous highs. So we're not seeing a massive amount of liquidity go into our safe haven currencies. We have more talks about central bank support in respected countries, stimulus plans, vaccines, still holding that optimistic sentiment. One of the reasons, as the US dollar had that short term bounce, and overnight gold went to go revisit these previous lows and is still holding bearish structure. And we're going to look at that now. So, now on gold, on the hourly chart, you can see that yet we have to keep in mind that it is a new fiscal year, so we have the potential for gold to do deeper pullbacks and corrections on the higher time frame, especially since last year when the COVID fear was first so what's the word, when COVID first hit the markets and the fear was having its initial impact. We saw that gold went to all-time highs and created new all-time highs around 2075. Since that point, as the COVID fears have gotten priced in, economies have started to open back up. A lot of the gold production has started up again, because you have to understand, one of the reasons gold was so bullish during this time wasn't just because it's a safe haven precious metal. It's also because that COVID pandemic overall led to those global lockdowns, which shut down a lot of global gold mining areas and production facilities. So you had the demand of gold increasing for actual physical gold itself, but the delivery and the supply of it being limited, right? So you had the value of it increase. As you had economies starting to open back up and you had a lot of these COVID fears priced in, you can see that gold has started to do some bigger corrections on the higher time frame. And from that 2075 point, it's already fell over 2,000 pips. Just from an intraday perspective, you can see that we were respecting this very strong bullish market structure where we peaked these highs at around 1953 and 1955. And then from that point, we had this impulsive sell to retest higher time frame bear structure and this bullish structure. We had very strong reaction initially, but as we had such strong talks regarding vaccines, stimulus talks, that US dollar bounced off 6-year lows, and gold just already peaking those all-time highs, and positional buyers exiting out positions, causing this deeper pullback. You can see that technically impulsive sellers are in control. We've broken out of this bullish structure, peaked intraday lows, and what we are currently seeing here was corrective structure or a consolidation or pullback phase. From the impulsive sell that broke structure when we first had liquidity being generated in this area, and we broke these previous lows and had sellers jump into the market and create a new intraday low, you can see we had almost about a $90 an ounce sell-off, or like 900 pips. Usually when you have very impulsive moves in the market, you have that strong impulsive move either going up or down, and then either a consolidation phase or a pullback that corrects about 50% of that move in a continuation. This is where the whole concept and ideology behind the Fibonacci retracement tool comes from. It's just based on impulsive moves and corrections, which behind the scenes is coming from the reaction of buyers or sellers exiting positions. So in this specific example, when you have this impulsive move and gold have this 900 pip sell-off, right? And you peak these new intraday lows, when sellers exit their positions and liquidate their positions to get out of the market and cash out, buyers have to jump in hand to relieve them out of the market. This is an automatic transaction in our modern markets, but that's essentially what's happening behind the scenes. This creates a pullback or a consolidation or a correction. Okay? So you can see we're starting to create this intraday bearish market structure, and this is just a correction and consolidation phase that we are in, and we are still overall seeing impulsive sellers in control with potential to revisit these lows and dig a bit deeper as well. Now, the one thing we want to look at when we're zooming into the price action a bit further is that when we had this impulsive sell-off over Asian session, which was from about 1852, you can see that even from our previous New York previous London session, we were talking about if gold breaks and retests below 1852, that would be safer sells to go revisit previous lows. We had a very strong rejection from this 1828 previous candle body low point. We failed to even retest previous lows. The candle bodies themselves closed back above these previous lows and price sensitivity area at 1836. And now, so far, for London Open, not London Open, for pre-London hourly candle, you can see we've grabbed some liquidity to the downside and failed to break. And yes, we are in this corrective structure, and yes, and gold is overall bearish, but I'm only looking for continued safe sells if we have a clean break below 1836, because you can see throughout about, damn, we missed those GJ 0.800 buys. But throughout about the last 7 days, the last weekly period, gold has been playing in this range from about 1828 to 1855, with sellers failing to break significantly from this 1836 price point. You can see we've had that reaction here again, where there's a lot of potential for gold just to go back right back up to this range and revisit these intraday highs. But I would only be looking for those buys if we break out of this lower time frame corrective bearish structure. So what can we identify? Yes, the higher time frame is bearish. Yes, gold is seeing a sell-off because market optimism is stronger. The US dollar is having a bit of a cap bounce from its 6 year lows. But gold is in this corrective stage, generating liquidity either through a consolidation period for an extended period of time, or a deeper pullback to like correct 50% of this impulsive move and then sell off. And we have to watch that accordingly and not just start to jump in sells without all of the proper confirms. So when we come to the lower time frame here to observe price action as refined as possible, we can clearly see over this extended period from New York session, when we peaked these 1858 highs in last night, from about the last 17 hours, that this lower time frame bearish market structure has been respected. So this gives us some areas of interest to work with. Now, for some trade ideas, I can easily state that if we come down again and fail to break 1836, this is high risk, high reward buys, looking for a rejection at previous price sensitivity areas and our higher time frame key level. If we come here and have this deeper pullback and fail to break lower, or just consolidate over the next hour or so until London, and then break and retest above 1844, this is safer, less rewarding buys, but we have more confirms of sellers' exhaustion and buyers jumping in the market, because we can validate a failure to break these previous lows. We can validate a break out of this bearish structure, and we can validate a break out of our medium term zone at 1844, which we already have predetermined, and we've seen rejection here previously. Okay, I'm only looking for safe sells now with a clean break below 1836. And if we get that clean break below 1836, we're running those sells down to the next 1828 zone. So let me label that out. And does that make sense to everybody? That yes, we understand gold structure and that it's had its impulsive sellers moves and sellers are in control, but it is in this intraday and higher time frame range where we've seen sellers struggle to break 1836. So if we can get a clean break below 1836, that's an easy sell down to 1828, and that's like an 80 pip range just to revisit those previous lows and reach that next key level. Okay, so let me mark that down quickly. Okay, so before I jump on to GJ analysis, does what we're looking for trade ideas through London session in New York and an intraday period make sense on gold? If we continue to respect this bearish market structure and fail to break, and then break below 1836, easy sells down if the US dollar continues its strength and we have that continued market optimism and sellers in control. Otherwise, we're only taking buys if we fail to break these previous lows, validate this as buyer side liquidity with a break out of the bearish market structure in 1844, and then taking buys up to 1852. Eric, we primarily trade these currency pairs, commodities, and precious metals or indexes through foreign currency exchange brokers. Robinhood is primarily deals with stocks and options, if I'm not mistaken. So you could probably trade a gold ETF with the similar ideology and analysis that we're talking about. Like if we're looking for gold buys, you can look for gold ETF buys. But other than that, we're trading gold spot directly. We're not trading like a gold company stock, and we're not trading like a gold ETF. All right, so gold we understand. GJ. Now, GJ, who was here? Who was here for the last live stream on Tuesday where we are taking advantage of the GJ buys? Edwin, it's just based on a higher time frame candle body conjunction point. Honestly, it's not. It's just a rough estimate based on those historical price points. So it could be on that 1836 to 1837 region. It's not always going to be directly on it, but it's good to look around that price sensitivity area on the higher time frames. So if you watch the educational webinars on how those key levels are mapped out, you'll understand where the ideology comes from. But it's not some exact number. It's just a great guides that we've seen. These historical price points, sorry, are great guides when we're looking at reactions on recent price action or intraday market structure. Okay, so anyways, so remember we are taking advantage of those buys. We can see that clearly on GBPJPY, even with the Brexit, even when we had that Brexit negativity, even when we had another lockdown in the UK, GBPJPY buyers have been continuously printing new highs and failing to break previous lows while maintaining bullish higher time frame and intraday market structure. Okay, so on Tuesday, as markets were primarily optimistic, and even though it took a while and we were primarily ranging overnight, we finally got our buys to play out. But what we wanted to identify, and remember what I was telling you guys that is key for us, is that now that lower time frame structure and that bullish bias, we just extend that and continue to play that out. So clearly, I don't have to go to like the 1 month time frame here. We can clearly see that what we were talking about from Tuesday and that GBP JPY webinar on the Capital Hungry YouTube channel, of course, that buyers are still continuing to print new highs. We are still in bullish market structure. And now when we zoom in, yes, we had from this new high point, I don't know why that's so big. Yes, we had this reaction from new intraday highs, which lines up with 142.2 psychological price level. We had this aggressive pullback. Okay. But this pullback didn't break previous highs. It didn't break previous price sensitivity areas, right? And that was just the reaction of buyers cashing out positions from new highs being peaked on GBP JPY. You can see this pullback came roughly to what price point and psychological price level that we look at 0.500. Okay, so it did look like GJ was going to start to break some of the bullish market structure on the lower time frame in intraday, But when we start to zoom in on the 1 minute here, you can see that we were playing this lower time frame bullish market structure, and these were the buys that we caught on the last stream. You guys remember these, right? I'm not trying to talk about, oh, we caught these buys. I'm trying to talk about that the fact that we executed on these buys, it just continued to extend our bullish bias on GJ. And you can see that our psychological price levels were being used as supports as we continued our way up and created new highs. Okay. So now we had this correction that broke this lower time frame bullish market structure, but the intradays are still extremely bullish, and we fail to break below previous price sensitivity areas or correct that impulsive bullish move with a intraday support being created at 141.5 and some minor bullish market structure being created now. So now you can see that obviously, as the Japanese yen is still relatively flat, and market optimism is still holding strong, that this minor lower time frame bullish market structure is being respected. Okay? So this on the lower time frames, and as per a scalper and intraday trader, this is the area I want to be looking at. And yes, we're starting to get some reaction at 142, but we still have about 18 minutes until London Open. So if we could get a pullback to retest 141.800 psychological price level, this is higher risk, higher reward buys from 141.800. And then the safer buys would be post pullback at London Open, then grabbing liquidity and creating the lower wick, and then coming back above 142 flat. Okay, we do have some UK GDP estimate data, which is a medium term impact. Actually, no, that's tomorrow. Sorry. So we don't have any UK data. That's my bad. So yeah, if for London Open, if we could get a pullback to 141.800, I'm still in a lower time frame and intraday bullish bias on GJ, or the safer buys with a pullback and then breakout above 142 to revisit the previous highs and extend up. With the current lower time frame structure and the current intraday structure, I would only be looking for scalp sells below 141.8. Okay, so let me label that out. Any questions? What are you guys talking about? Hey, capital hungry. To be honest, how much money can you make with a 1K trading balance account? The best I've done with 1K is run it up to 50K in 2019 using like a compound principle and a lot of the concepts taught here. But I've always had a good career. Like Capital Hungry is a business that just was created over the last year. Before Capital Hungry or before trading, I was already working in financial tech for a big Canadian bank. So I never traded demo. My trial and error process was always depositing money, burning it, depositing money, burning it. And then as I started to focus on the education and all of these concepts taught, that's when I finally started actually making money, and I had some good runs taking smaller deposits of $1,000 to $5,000, roughly to 20 to 50K and higher, and then withdrawing it out. And then through that process is when I started the Capital Hungry Telegram analysis chat. But that was free to start. That was while I was still even making, that was while I was already making money trading, but using smaller lots. I was using penny lots because like obviously I was just starting out still. I wasn't using like 10 lots right away. But that was just like a free analysis channel that I started after my trial and error process and after I started becoming profitable, because I wanted to share my what I have learned and what works for me and what doesn't through that 2 years of trial and error. But you guys go check that free Telegram analysis channel out yourself. Now I play with like, especially with the new broker I started, I play with anywhere from like 50 to 100K accounts, and I'll primarily scalp. But I still like to start with separate accounts on smaller balances, just to keep my discipline and patience in check, and do and run those compound principles, because it can be very rewarding, but it's something that requires a lot of patience and discipline. But you guys could see that, yeah. But you guys could see that. Oh, gold's coming down to 1836, eh? Let's watch this. But you guys could look through that in the free analysis channel. And then after this free analysis channel was running for months, I started to get a lot of exposure. I'm not on social media as much now, but before I used to be on Instagram, and my Instagram account had like 20,000 followers. Even this free analysis channel has like 4,000 subscribers, right? So it was getting to the point where I was providing so much free content through this channel, like analysis, trades I was taking, like the penny lot days. Everybody's seen this who's been on my streams, right? I was providing so much information, and these posts back then were getting 1,000 views. Okay, that might not seem like a lot, but when you're in a niche and you're getting 1,000 views on a post, think about possibly 20% of those people messaging you multiple times a day or every day. That's 200 people. Think about 200. And then obviously, as I was growing, it was 2,000 people, 3,000 people, 5,000 people. Instagram had 20,000 people. And all these people are saying, hey, can you manage money for me? Can you send me signals? Do you have a course? Do you do a mentorship? So then I was like, why don't I monetize and create a business out of this? And then that's where I created the private channel. But if you want to start from a low amount, it's 100% possible. What are you doing explaining this than trading? No, I'm explaining about how it is possible to start from a low investment amount and start from penny lots, and like take trading slow and steady. And like if you put in the work over like a year, 2 year, 3 years, and you're studying the fundamentals and economics, everything's going to come together. So I was just showing people that you could see me from when I started this channel, um going from penny lots and showing the process there, all the way to like what is shared now, going to like whatever it may be, 10 lots, 5 lots, 15 lots. You get what I'm saying? Or whatever the profit may be nowadays. And that you don't have to have huge amounts of capital and all that stuff, because trading is not just analysis or entering trades or taking trades. If you think trading is just analysis or entering trades or winning trades, then that's an extremely, extremely, extremely naive mindset. Trading is a entire personal journey of self growth in itself. This could be high risk, high reward buys if we fail to break 1836, eh? But that's what I was talking about. Obviously, we don't have the safe sells yet. We didn't break below the key level. You can see for pre-London hourly candle, we came to react to the key level and haven't broken above it just yet. So if we could get another reaction here in a double bottom, that's high risk, high reward buys. And obviously, after the pullback, if we break the bearish market structure, that shows us a lot more buyers momentum in the market. What exactly do you offer in your private channel if you offer this for free? It's crazy, right? A lot of people are shocked. Like, how do you do this free? Blah 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 blah. But you can go check. You can just go ask any if there's any capital hungry private members in the YouTube chat. You guys can explain it for me, so I can talk about the analysis here. But anyways, we don't have any economic data reports we got to focus on. When we're looking to some of the headlines to the left, we're not seeing anything too high impacting. Is it really low risk, high reward? No, it's high risk, high reward. The higher the risk, usually the higher the potential reward. But like for example, if we were to if gold was to go, the ideology behind it is if gold was to go up and you took entries at 1836, you don't have as many confirms as if you were to take buys from 1844. You're pretty much just expecting and going off the idea that that sellers are going to reject this key level in previous price sensitivity area, and going off a technical support being created from this point. And if those buys play out, yes, it's high rewarding, but you didn't have as many confirms as these buys. These buys, you confirm that, okay, first we failed to break these previous lows, then we have buyers jump back in the market, then we break above these previous 1 minute highs in bearish market structure, the dollar is also weak. You check off all these confirms, but as you check off all those probabilities, you have less reward than this higher risk entry. But that is the market. The market is all risk versus reward. The more patient you are, usually, like patience, and it's this is extremely sensitive in trading. You need patience. Otherwise, if you're too impulsive, you're going to lose, right? But if you're too patient, you're going to miss the opportunities. If you wait for too many confirms, by the time the trade's going to be, the trade is going to be essentially what we call done, or the range is done and the market just starts to range. You get what I'm saying? And those entries of high risk entry areas, safer risk entry areas, that is all unique and dependent on you as a trader. Trading is extremely unique because we all come from different lifestyles, financial backgrounds. We all have different personalities, which is going to impact our decision making through trading. Some people are like me, where you might have a very addictive personality and you might be extremely aggressive and impulsive. That's why me, like I was telling you guys, my mistakes in trading were constantly crashing accounts, trying to make $1 million overnight. Not actually, but you get the idea. Like trying to do crazy things overnight, over leverage, over trade, keep trying to make more and more and more, and you just end up crashing and burning. Because I had and still do an extremely addictive and aggressive and impulsive personality. But some people are on the opposite side of the spectrum, full margin gang, exactly, right? It's not good, but that's what it's called. Some people are on the opposite side of the spectrum, where they are way too laid back and patient. They're too scared. They're too scared to execute at all. So they don't get to make any money or lose any money or experience anything. The good and bad about the guy who is impulsive and aggressive is through my losses, I've gained experience. At least the aggressive person and impulsive person executes. So if that person is smart, they can learn through their experience of execution and trial and error and losses. Just like you could take 100 free throws and miss them all, but then say, okay, I got to fix this about my direction I'm aiming, I got to adjust my power, etc., etc., right? But for the person who is too patient, too scared, they never even execute. They don't get to win or lose. All right. Yeah, I've read Trading in the Zone, obviously, but me, I am personally a very aggressive, impulsive, and have an addictive personality. So you have to be very self aware of your personality. So with that, I used to be the guy who always wanted to take those high risk, high reward entries. But as my trading developed and as I financially matured, and as I started to risk more capital and play with more capital as my trading grew, I didn't want to risk a 10 lot on those extremely high risk, high reward entries. I wanted to wait for more of the confirms and probabilities and then have more confidence on my side, and then I might not get as a big a piece of the pie as taking those high risk, high reward buys, but I still have more peace of mind and less stress, which is a major, major key in manual trading. Yeah. Okay. So what I'm starting to see now, and I don't want to start to jinx it, is a very strong reaction at 1836 and a failure to break. London Open is in 5 minutes. So if London Open hourly pushes down here to create a double bottom and fail to break 1836 in that price point, that's high risk, high reward buys. Otherwise, these are the safer gold buys, getting that pullback and that shift in the lower time frame structure and price above 1844, looking to go up to 1852. And the safest sells would only be below 1836. And do you see how I didn't want anybody to rush into sells when gold is playing this corrective range? Because if you started to jump into sells here, if you started to jump into sells right at 1836 without the clean break, you're going to be dealing with these strong reactions that we've seen between buyers and sellers at this price point. All right. So let's keep an eye on that as we approach London Open in the next 5 minutes. And let's keep an eye on the US dollar, because if gold's having that reaction to the low, it looks like the US dollar is probably fading. It looks like the US dollar could fade out that strength and is respecting failing to break above its previous highs for now. So let's keep an eye on that. GJ is also potentially breaking above 142 for London Open. So this is going to be a nice intraday bullish candle close above our 142 key level after respecting this support in previous price sensitivity area. The only thing is, obviously, we didn't clear the previous intraday highs just yet. But what would be ideal for London Open after this very strong bullish engulfing is that retest of 142 and quick scalps back up 20 pips to 142.2. So let's keep an eye that our bullish bias on GJ is still being respected. And the trade ideas on GJ and gold still make sense to everybody. And we're going to go on to Euro USD now. Just quickly reviewing the headlines to the left of the side of the screen here, the real-time news headlines. Nothing too significant. We do have China not allowing anybody to come investigate the COVID spread stuff, but nothing too crazy. Let me read before I jump on to Euro USD. Let me read if we have any questions here. We'll highlight this bearish market structure better on the lower time frame. Okay, so in Capital Hungry private chat, you can see that so much shit, fuck's sake. So you know how I uploaded that gold webinar and that GJ webinar on YouTube? We do that across like different pairs in the private chat. So you can see here on the intraday analysis. So you can see here in the intraday analysis for Euro USD, after we've peaked these all-time highs, in the same time that the US dollar is being bought up from its 6-year lows, we were starting to anticipate the higher potential for a pullback to give us better risk versus reward buys after retesting higher time frame bullish market structure. You can start to see that we're breaking below this minor bullish structure and staying below the key level for now when we come back to the intraday charts here. So we can see the exhaustion by buyers, the break out of this intraday bullish market structure, the creation of some minor bearish market structure, intraday lows being created, as well as this pullback failing to really break above the key level. And we are right back with sellers in control revisiting these lows. We are at a very, very key decision point at these lows that is going to be dependent on the US dollar and market optimism overnight. If we break below these candle body lows, we have roughly a 30 to 40 pip sell range down to the following key level to run that deeper Euro USD correction to these key levels 1.21, 1.199. If we fail to break this low, when we identify the lower time frame price action, right, and the US dollar fades off its strength overnight, this can be a potential high risk, high reward buy area, similar to gold at 1836 when it's retesting those previous intraday lows. So let's identify the lower time frame structure and price sensitivity areas here. You can see across the board here the reactions on the 1 minute at this low point. I'm just going to extend that out. Right? Where even right now we are exactly bouncing off that mark. I do not want to play any guessing games essentially in this lower time frame range, but safer scalp buys would be above 1.2175. And we're only looking for sells. And we're only looking for sells if we break below these 1 minute lows, where you can see over almost 3 days now we failed to break this significant price point, and we can see the reactions here. So if we finally get sellers to break below this price point, we can validate all that sell side liquidity for sellers to create a new low and run that 30 to 40 pip range down to the 1.21 flat higher time frame key level. Okay. It's London open right now as well. You can see gold already pushed down to create its lower wick, and it's pushing down to create its potential lower wick. And let's see if it retests 1836 again, or those 1 minute lows. If this hourly candle turns bullish as well, it will show us more signs of potential correction to come. Yeah, this is euro against the US dollar. So let's watch that accordingly right now. We could honestly, if EU fails to break these lows and US dollar's weak, we could even start to sneak in some buys above this rejection area here, where you're seeing that buyers fail to break. So that would already start to give us a 15-20 pip scalp squeeze to the upside. All right. So watch that as well. But right now, I don't want to start to jump into anything here. I'm keeping an eye on gold. If we get a deeper retest, if we get a deeper retest down to 1836 again, and as it's London open right now, or if we break above 1844 for the safer squeeze buys. So we've broken down some trade ideas of what we're looking for on gold and GJ as well as Euro USD. Let's just see for this hourly candle, now that we've broken above it, had a clean break above 142. If we could get a retest of 142 and continued buys to the upside. Otherwise, we're watching the reactions at 0.200. Gold we'll keep an eye on. Euro USD, keep an eye on. Only safe sells below this point, safer buys above this range. We can even start to sneak in some buys if we break above this 1 minute price sensitivity area. I just have to go to the washroom and then we'll do some US30 and GU analysis. And watch your headlines to the left of the screen here as well. Dollar, you could see so far through London session, multiple rejections at previous intraday highs. It's fading out its strength. It's in a bit of a intraday range here for the last period of about 2 days. But if it can start to make its way down and fade out that strength, will show us that markets are more optimistic and support that gold, EU, and GU buy sentiment and show us that potential for more GJ upside as well. Bro, I drink a coffee when I wake up right now. That's why. Hey man, I love Monty and Seed, but these guys don't be talking for hours straight. All right, they be like, yeah, yeah, it looks good. Yeah, all right. Let's see what this does here. Those are my boys, but I be talking the most. Get dehydrated, so I be drinking a lot of water. Then I gotta take a fucking piss. But yeah, after we do our analysis on like GU US30 and stuff as well, you guys can feel free to send charts in and everything. Yeah, I'll just be back in a second here. Okay. So we're what 10-15 minutes into London Open. GJ had a very strong impulsive move breakout from a 142 to 142.2. I don't know if anybody got the 142 breakout entry, but still waiting for the pullback myself. Gold here, no clean break of that bearish market structure we highlighted on the lower time frame, you can see. And so no clean safer buys just yet, as we haven't broken above that price sensitivity area, and we're having a strong rejection there. So keep an eye on that still. Headlines to the left, nothing too crazy here. World Health Organization talking about the scientists going into Wuhan. Any questions? Yeah, we're still waiting for the safer gold buys or sells. We're just reacting at this. We had a strong reaction at 1836. We're having a strong reaction here at the retest of the bearish lower time frame market structure. You can see that volume and volatility isn't the strongest so far with the reactions we're having at these lower time frame price points. Euro USD, I'm still looking to see if we could get that quick squeeze cleaner break above 21,150 here. But obviously the safer buys still stand up here. No safe sell confirms just yet, of course. US dollar went to retest previous lows, failed to break, ranging around right now. Sorry, I'm just reading the questions in here in the Zoom. I'm just reading the Zoom chat before I go on to like a different pair here. Okay, all good. To watch pre-market data. What do you mean by pre-market data? And let me see these other questions. No other questions here. All good. What do you mean by pre-market data? You could just pull up like if you're talking about stock markets, you could just pull up the charts. Give you a 15 pip scalp? Yeah, we're waiting for it, my friend. If we don't do a deep of a pullback at 142 and this 1 minute breaks above 142.2, we could just see a continued bullish squeeze to the upside. So let's keep an eye on GJ. Our bullish bias is still holding, running the same buys from the start of the week. Euro USD, nothing significant yet. GBP USD, I'd be looking for a retest of the key level, what I was going to talk about. But you can see we've already had the breakout above the key level here and above the previous price sensitivity area. But yeah, if we could get a clean retest of 1.365 and then a continuation to the upside, that would be ideal for GBP USD. That's what I'm looking for. 30-minute candle closing in about 12 minutes. Global index to see investor. That's just like the stock market charts, right? You could just pull up the charts on TradingView. You just pull up a US30 chart. Yeah, if gold was to come back down to 1836 and create a double bottom and fail to break, yes. Let's see here now with this new 15-minute if we can get the break above 1844. Or if we still remain below the bearish market structure. I'm gonna take a look at US30 and in a second. I'm just answering some questions here. Sorry that I got one-on-one. And I'm just reading the YouTube chat. GJ reacting at 0.200. If we get multiple rejections at 0.200, higher probability we'll get our pullback to retest structure, retest either 142 or retest this bullish structure. So we'll keep an eye on that anyways. GBPUSD, it would be ideal if we got to retest this higher time frame key level, and then we could take buys to right back to revisit these previous 1 minute highs, 20 to 30 pips. Gold is still staying below the bearish market structure. No clean breaks above just yet. We had some nice moves that previous London session where we got those GJ buys, but overall to start the year so far, the London sessions have been fairly quiet. If you guys have noticed, usually it ranges overnight primarily, and then we see more of the stronger moves through New York. But it's all good because the same analysis still stands. Like even if this analysis doesn't play out through London session, it's still very viable through New York session as well. Yeah, it's just because we're starting out with the new fiscal year, investors are usually on the sidelines to start out the new year as well. We haven't had as much economic data as well through the London session. It's been a bit quieter to start off the year. And then we have some more volume coming in the next 30 to 40 minutes as well. Still waiting for the GJ pullback. Still waiting for gold to either have a clean break below 1836 or the break above 1844. And these trade confirms for the safer trades. Euro USD, no significant break above the minor medium term zone yet or safe sells just yet. GBP USD, it would be ideal to get a retest of 1.365. Gold looks like it's going to come dig a bit deeper now after these multiple rejections at that bearish market structure retest. So still waiting for that to set up for our execution points. Once we do get that break above structure, easy squeeze. Coffee. I got like what's that called? Keurig. We just put those cups in it. I don't know, man. I'm not a big coffee person. I used to work at a coffee shop when I was younger, so I never liked the smell. Can you please explain why you choose these currencies in US30 and gold to trade? Primarily because they're easy to read, as a lot of them work hand in hand, in the sense that when you have your risk currency versus safe haven pairs, such as like GBP versus JPY or euro against the US dollar, or you have gold, which is a precious metal safe haven, or you have a stock market index, which is heavily dependent on optimism or fear, it becomes a lot easier to read because when you can see that you have these major fundamental catalysts at play and GJ, EU, GU are all moving hand in hand or fairly similar as per the market structure and intraday price action, it just gives you more confirms to execute across these pairs and see the overall flow of money through the markets when you have a significant catalyst active. You know what I mean? Like, for example, when you had the mass market fear with COVID, you saw like GJ, EU, GU, AUD, USD, AUD, JPY, didn't matter. They all had those very significant downside moves because of that impact and overall movement of the liquidity across the markets going into safe haven currencies and coming out of the stock markets, etc. You know? EU, I'm still waiting, man. I would wait. Depends where you're putting your stop. Got it at 1.2153 here, like around here, where right here, where it currently is. You could put your stop loss and have I guess a pretty tight stop loss below these wicks, but I'm still waiting for the new 30-minute candle in 6 minutes. Under what circumstance would US dollar strength come back? You could see it come back if we have any signs of economic rebound in the US and when the central banks start to increase their interest rates again. This can raise the demand of the US dollar, especially at a historical low points, and you have that economic cycle repeat after, like, because the central bank just uses interest rates as like a monetary tool of when the of when the economies are struggling, they'll cut the rates to promote the spending and lending of money, but then they'll do the opposite when economies start to rebound. They'll decrease the US dollar money supply and increase the interest rates. Yeah, if you guys want to send charts and anything like that, just you can just send it in. Sorry, I missed them. If you guys enjoy these streams, if you want them more often, make sure to send a like and subscribe and share these streams around. And then if you send a chart, I can take that little trading view code. Other than that, we're still waiting for these trade ideas to set up. Here, I'll check this out. We're still waiting for the GJ pullback. If we can get any better buys, we're still waiting for our gold decision point. If we get a break above 1844 or watching reactions at 1836. Because the US government is just as corrupt and works hand in hand with the central banks. They're paid out. It's like the top of the chain drug dealer giving his runners the merchandise. You know what I mean? They're partners. They're selling to the same customer. Yeah, the world is not a fair place. You know, a very corrupt place. New 30-minute candle in 3 minutes as well. Yeah, we're looking to our headlines. We're not seeing too much here. GJ, oh, you took those 142 buys. 142 breakout buys to 142.2, 1-to-1 RR scalp trade. Bullish price action. We had the close above 142 in those previous 1-minute highs. Took that squeeze up with the London volume. A nice scalp trade to take. Psychological price level to psychological price level. Solid, solid. Gold coming deeper here, it's looking like. Might get that 36 retest. If you want to see my opinion on like GBPJPY or gold specifically, higher time frames, I got I got two 30-minute webinars on those, both of them. They just recently got uploaded as well. New 30-minute candles here now. Gold still looking like it's staying below the bearish market structure so far, and that it can squeeze a bit deeper. So obviously we don't have the safe buy confirms above 1844, and we're still waiting to see reactions if we come down to 1836. Don't really want to mess in this little lower time frame range we are in, where we've just been going up and down like 20-30 pips. Those are some very nice rejections that we had at 1844, but just waiting for the execution points that we already had pre-planned. Did you send a chart? Wow, where'd you send it? Banter? What chart? Oh, it's not open yet. Oh, just to watch the lower time frame. Oh, we talk about this bullish structure. Just because we had this clean break, I'd rather watch the reaction at the key level, and you can also see like that structure you highlighted. We're breaking it now as well, but I'm primarily watching this bear structure and that 1836 key level. Nothing to execute on yet. There's that one GJ breakout trade, but I didn't get to jump into that, and we didn't get enough confirms for that as well. And I want to see how gold reacts at 1836. Because the new 30-minute candles just open. See if it continues down, if it's just making a lower wick. GJ new 30, we still failed to break 140. Like GJ, we're watching if we can get the retest at 141 flat for continued buys up and a support formed, or the breakout above those previous highs at 0.200. Euro USD, that's all I was telling you guys. Don't jump in Euro USD just yet. We didn't have the clean breaks above yet. So hopefully you guys are listening to me, as the markets are just fairly quiet and ranging right now. Besides that quick little impulsive move on GJ for 20 pips, not much has been going on through London sessions primarily. Please give what a look. I mean, nobody's that one person sent a chart. CMAX sent a chart, but nobody's else. I haven't seen any charts in the YouTube chat. Sorry if you guys are sending those links. I'm not seeing any. Just yeah, send that code thing like we were talking about in the last stream, so I can copy and paste it. Coffee, I chugged this coffee too quick, getting me anxious. Waiting for something to set up. I don't even like coffee. Why am I drinking this? CAD CHF daily chart. So Saudi Arabia's assurance that an OPEC output deal, which can keep the Canadian dollar fairly bullish and give strength to the Canadian dollar. The secondary in this pair is the Swiss franc, which is a safe haven currency. You can see from the COVID crash point, we've been respecting this bullish market structure, and we've also broken above this minor intraday bearish market structure with more bullish price action. TP1 makes a lot of sense, and if we break above that point, easily start to run up over the next few days up to your TP2 point. Yeah, this makes a lot of sense. Very nice breakdown. I like how you analyze the market structure. You're looking like it's more of a intraday and swing trade. I like the areas of interest highlighted, market structure highlighted, the fact they're talking about the positive oil correlation impact on CAD. TP points, stop loss makes sense of where your trade would have been invalid. If sellers broke below this price point, your trade would have been invalid. Yeah, it's a nice, very nice markup here. Solid analysis and chart. And if you're in that trade, like that's a good trade too. We look for primarily scalps and intraday trades. So we'll be looking for entries through session periods such as London session or New York session and executing at key levels as per analysis. And if the volume and volatility allows, we look to extend trades into intraday trades. But obviously, if markets are ranging, if you're not seeing anything too crazy happen, you don't want to just keep, you don't want to fight the markets. Sometimes it's best just to take your scalp profit, sit on the sidelines, wait for the next best opportunity. The hell? Who's adding me to a group here? Let's see if gold breaks above 1844 with this new 30-minute candle. I don't want to jinx it. I don't want to jinx it. And let's see the potential reaction. Who added me to a group then leaving? And let's see the potential reaction of GJ at 142. As per the reactive headlines, we're not seeing too much here. Like, we don't have any economic data reports, like I stated many times, and when we're looking at the headlines, we don't have anything that's high impactful. Volume and volatility so far, 40 minutes into London session, also nothing too crazy. If we get bored, we'll go raid Monty or some shit. Yes, this is exactly what we're looking for on GU, is a retest of 1.365 flat, a lower time frame support formed, continued market optimism to hold, and US dollar strength to get faded out and weakness to continue, and then scalp buys right back up 30 pips to revisit these highs and continue up. So from an intraday, like if when you're looking at the 15-minute here, you can validate that this is a very strong support level here. You can see that this range we were creating, we had a break out of intraday bearish market structure where sellers were in control, and this was the first signs of sellers exhaustion. We can confirm this as buyer side liquidity, and we've had a strong impulsive breakout to create a minor intraday high. So if we could retest this previous consolidation zone and fail to break below, this would be a great point for buyers to jump in to revisit these highs and continue higher. That is, I agree. That is also what we are looking for on GU. I'm just watching primarily the 1 minute chart for those reactions, but obviously our bias that GJGU is still very bullish. Buyers are printing new highs, and we want to extend our way up is still holding. So I agree with you. Leave you, Mr. Leonard. I hate coffee breath, man. I hate what this shit. Coffee tastes like ass, yo. Why do people like this? It doesn't even taste good. I'm more of an energy drink guy. Maybe because I'm younger, like in my 20s, and I grew up like in the video game age. You know what I mean? Like where you be crushing monsters, playing games with your boys all night. I'm more of an energy drink guy. Coffee doesn't even taste good. Cop some of that bang. I should get a G Fuel sponsorship, eh? Okay, I'm just going to go grab some water, and then I'm gonna look at this chart. No, I used to play Modern Warfare. I'm more of a I used to be a Halo MLG player. All right, but yeah, keep an eye on the same trade ideas. I'll look at this chart in a second. Halo MLG? Yeah, serious. Gold is in. Gold is potentially breaking above 1844 as well. Keep an eye on that. And GJ didn't look like it gave as big of a retest to 142. But if this was the pullback, and we didn't get as deep of a pullback, and we come back above 142.2, we could still take more buys. Okay. I'll just be back in a second here with the energy sword. This guy. Okay. Yeah, sorry, my girlfriend was messaging me in the middle of the night for some reason. What do we have going on? Headlines to the left. Okay, gold. Gold isn't looking the cleanest right now. We are creating a little bit of a support above 1844, but we have to keep in mind this previous rejection area and these 1 minute rejections at this price point. If you have any 1844 entries, just keep them risk free, but watch it accordingly in case gold does a deeper pullback and fails to break above this price point here. Also, keep in mind, we might get that gold squeeze, but it's best to wait now for the new hourly candle because the hourly candle could come revisit these 1 minute lows, then pop back above. Dollar still looking relatively flat, which is good. So our EU buy bias for the next hourly candle looks a lot better too. If we retest 1.215, GBP USD, GBP USD was just like 4 pips from retesting the key level on the dot. GJ was like 1 pip from retesting 142 flat, and it had a 10 pip bounce around it. So let's just see what the new hourly candle brings. If the new hourly candles retest these lows, create a double bottom, then continue up. Gold's just looking a bit iffy here, so let's just stay out of gold for now and wait for the new hourly candle as it's reacting at 1844 and failing to break this price sensitivity area. And we had some strong 1 minute rejections here. Oh, sorry. I was just saying, let's wait for gold for the new hourly just because of these strong rejections at this 1 minute price sensitivity area and the new hourly candle. Because we can see the previous this 15 minute already made like a lower wick. We're reacting just 5 pips at 1844, but we failed to break above this previous 1 minute high. And when you zoom in more and observe the price action, you can see we are starting to create a order block above the level. It looked like we were going to get a strong impulsive push, but we rejected this price point right on the dot multiple times now. So I'd rather wait for the new hourly just in case the new hourly comes down to create a lower wick, then continues back up through pre-New York hours. Have you guys noticed that through these London session streams, sometimes we get the moves to play out through the London session volume, but most of the time it starts to play out later in the night through like that 5 a.m. Asian session close to pre-New York hours. So I'm just expecting that if gold creates for the new hourly that lower wick and then follows up through pre-New York and Asian session close hours, then continues up. Looks like GJ for the new hour in the next 3 minutes will get a better reaction at 142 as well. Euro USD, let's watch that. Overall, though, this London session, not much to talk about. Not much really happened. There's not any crazy economic headlines. We didn't have any economic data reports to focus on. We haven't really seen any high impactful moves across any currency pairs. It's still early into the fiscal year with a lot of investors sitting on the sidelines. GJ had that nice initial 20 pip squeeze breakout, but other than that, not much. Gold has just been playing up and down from 1836 till about 1844 here. What happened to the volume? Oh, trading volume. Okay, I was like, oh, is my mic not working again? I went to go check the settings. Misa, it depends. It's not, if it was that easy where you could say that London always consolidates, then New York has the moves, the market would be way too easy to trade because you'd have that consistent pattern about now waiting for this kill zone, like you say, right? There's plenty of times where New York can range and London has crazy impulsive moves. Sometimes Asian has strong moves. You know what I mean? So it's hard to create a sort of pattern in that type of sense of saying, oh, New York is always going to have a good move or solid moves or higher volume or et cetera, about London is always going to range. I wouldn't say it's that simple in a sense. GJ, new hourly candles in 1 minute here. We have another quick reaction, but obviously the new hourly candle can create a lower wick first, and we're sitting right on the key level. So we have an hourly candle closing, and the 4 a.m. one just opened up right now. Gold's hourly candle just opened up without a upper wick as well. So if it grabs liquidity to the downside first and creates that lower wick, and then still maintains the above 1836 in the minor bullish market structure, it comes above 1844. Those buys still look valid over like the next few hours, even going into pre-New York. Otherwise, obviously, if we remain below 1844 and we come back and we stay below this bearish market structure, then um, we're not playing with this. We're not playing guessing games in this range. But so far, this hourly on a wind already has a very minor upper wick. But so far, we're getting strong reactions at this exact same level for an extended period of a couple weeks now. Or sorry, a week now, 7 days now. So I want to see how we react. I don't really want to mess in this range. Those same trade ideas still stand on gold. As you can see, not much has happened overnight. It went up and down about 20-30 pips here. GJ digging a bit deeper just on the new hourly, retesting. The one thing we want to note now is when you're looking at the lower time frame, you don't want to just be zoomed into the lower time frame, because what we can acknowledge is, yes, we had that initial impulsive move at London Open, but buyers retested those previous highs and are exiting out positions now with a bearish candle close. So if this hourly candle now, where it already has a bit of a top wick, and if it stays below 142 and we see 1 minute rejections below 142, you know there's a higher potential of a pullback as buyers exit out positions to play in this higher time frame range and come to at least retest 141.8 and then continue down. I would really need an order block above 142 flat right now and the hourly candle to come back above it to start seeing bullish momentum to revisit these highs. Because yes, GJ is bullish. Yes, that play between 142 to revisit these highs played out, but you can't deny, as you're being objective viewing the markets, that buyers have exited out positions at these previous highs, and we had a bearish candle close on that hourly candle. So let's just watch accordingly. We can see that this hourly candle at least has already started to make a lower wick and seems to be coming back above 142 flat. But let's just let a flat candle body support come above the key level and let an order block be formed, and then have more confidence to take the buys up. So let's just wait for a couple of minutes of candle closures to get a mix of bullish and bearish candles and a bullish engulfing perhaps off the key level, and then look for a scalp up. Don't want to force anything just because volume and volatility has been fairly stagnant, and you can see that the market has been ranging overnight so far. So you don't want to force anything and then just get caught in a range and stress over that. Sometimes the best position to have while you're trading the market is no position at all. It's best to trade when conditions are clear, probabilities are clean, in the sense that you have your confirms building up and what you are looking for ahead of time is playing out in front of your eyes, so you can have more confidence in that. And some days when the market is ranging, there's no point to stress and fight the market. Like GJ just went over the last 2 to 3 hours in London session. GJ just went up and down 20 pips. Gold went up and down 20 pips. Euro USD is probably went up and down 20 pips. At least Euro USD now, as the dollar still remaining relatively flat, and we're getting this hourly candle already made an upper wick and retested the key level. If Euro USD made that support we were talking about at the retest of 1.215. So this is looking pretty good for this first squeeze up, and obviously the safer buys are above 2175. When we're seeing some of these headlines to the left, we just have some German public health officials speaking about stay at home, work from home, whatever's possible. We have some Indian pharmaceutical companies talking about vaccines. A lot of this stuff is already priced in and well known about the markets. Other than that, over the last few hours, not much else has been going on besides updates. Of COVID numbers, and we didn't have any economic data reports as well. Drop a like on the stream if you would like to keep having this content. Thank you, Scarlett. I appreciate that support. I appreciate that. Like and subscribe, share it around, post it on your social media. It's free to post this YouTube link on your social media, send it around to your friends and other traders. Free to do, you know what I mean? If you're in any trading groups, send it out there. My laptop crashed when I saw my phone. I was 9 pips up. Now I'm 2 pips in drawdown on GJ. Oh, your laptop crashed when we were talking about like wait for the new hourly candle. It's still above 142 right now. Hourly's still holding above there. Is Monty's stream done? Monty's done for the night? What's Monty up to? What invalidated the gold entry at 1844? So what I was talking about, Thomas, that invalidated the gold entry and why we should stay out of it was two things. One, this initial reaction and break above the level looked good, right? So you can see we were starting to, obviously we failed to retest the previous low. We are starting to notice some bullish market structure developing. We broke above the previous 1 minute highs and we broke above the bearish market structure. But this was all happening roughly 10 minutes before an hourly candle close, okay? The first cue that this wasn't looking like the cleanest breakout was the fact that the first breakout candle got instantly corrected and engulfed, okay? The second cue that it wasn't looking like the cleanest breakout or to start looking for buys here was that, yes, we started to create this minor support around like the zone we're looking at, but this next impulsive candle pushed to the exact same candle body highs with the following candles closing with these bearish rejections. So number one, the breakout wasn't, as per situations where you could have a breakout and retest this, and on the 1 minute time frame specifically, this isn't the cleanest breakout when you're looking at the price action. Does that make sense to you guys? Obviously, number one, right? You have like this bullish candle is looking great, but the following candle literally instantly corrects it, like exact same size, exact same candle bodies, right? And then so you're like, okay, that was a nice initial reaction, and then you see this support start to be formed. You're like, okay, wait a second, this isn't looking so bad. The second impulsive push goes to that exact same price point and rejects again, and you start to get some bearish candle closures, as well as, yes, we're looking for the price point and break above 1844. And we could take that squeeze up to even 20 pips to retest these previous highs at 1846.5. But we have to be mindful of this price sensitivity area and rejection point to the left, and we have to be mindful and objective of the price action we're seeing right in front of us. So yes, we were starting to get that potential break, but the price action at the time wasn't giving us the confirms that was showing us buyers momentum. It was just showing us a reaction at this point, and then we were coming to snap back below range. And at the same time, it was like 5 minutes before a new hourly candle where it made sense that if we don't have a clean breakout and a clean hourly close above 1844, that the next hourly candle is going to at least do a deeper pullback within this range. So this wasn't showing me enough buyers momentum. When you're objectively observing the price action and with the timing of the markets, in the sense that we were coming to an hourly candle close. Like when you look at the hourly candle, that 4 a.m. hourly candle close here, this is what I'm talking about. It looked like we had that bullish momentum, and if we had the hourly candle close above that price point and bearish structure, it would show us a bit more momentum as well. But it closed below. It ended up closing right below it, and then we had the candle close quite weak. Like, yes, this is good. Yes, this is good rejections at the lows, but it's not like we saw massive bullish momentum or buyer order flow enter the market from those rejections so far. We've just sort of been consolidating overnight. So these same trade ideas still stand. It looked like we were going to get that potential breakout, but with that chain of events and price action on the 1 minute, where the first breakout candle got instantly corrected, and then the second potential for a breakout rejected at that exact same price point, and the fact that we had a new hourly candle opening up, I wasn't too confident in that buy. Now, for this hourly candle, as it's potentially making a lower wick, and we're getting a stronger little flat candle body support here, and this hourly candle has yet to retest these previous lows. If this can come above 1844, that looks a lot better. But again, we're still below that 1844 and previous high price point for now. And obviously, we don't have the safe sell confirms. I don't want to play guessing games in this range on gold when it's consolidating or in a corrective phase. I would just rather wait for the confirms, because once you do have those confirms and you can check them off, you'll have more confidence to execute the trade, and it does eventually play out, right? You just have to be patient and wait for it. GJ, like I was talking about, just the similar thing as gold, where yes, it came to retest 142 flat again, but the hourly candle ended up closing pretty much not too, like, only 5 pips above the key level. Oh, sorry, the hourly candle rejected 142.2 and pretty much closed right on the key level here, with this new hourly candle having higher potential for this pullback to potentially 141.8 as long as we remain below 142, as we've seen buyers exit out positions at those previous intraday highs. All right. So that's why I said let's stay out of GJ buys at 142 for now as well. Just as we had the new similar idea with the timing of the hourly candle closing and the new hourly candle opening up, and the fact that we had that, even though yes, on the 1 minute we're seeing the bullish price action still, don't forget to zoom out and check your intraday candle closures, especially when you're scalping during a session, because you can't deny that hourly and 30-minute rejection right at those previous intraday highs and our psychological price level, right? So it makes more sense that this hourly candle is going to have a deeper pullback to at least 141.8 as long as we remain below 142 flat. As buyers start to exit positions out, and then we'll watch the reaction at the retest of this lower time frame minor bullish structure. If we break below there, easily safer sells down to 141.5 as we play in that intraday range, right? Euro USD, again, very nice reactions at 1.215. Dollar still is fading out some of that strength and bearish for now, but you can see we still have yet to break these previous lows, and we're reacting at a key level support on the dollar, as well as the markets have just been ranging overnight. So we don't really want to force any trades or again fight a ranging market and stress for no reason. So don't be surprised if you are in entries here. The one thing about it is you can set risk free or have a fairly tight stop loss when scalping EU because it's such a liquid pair and the spreads are fairly tight across most brokers. But just keep your risk fairly tight, because if we don't break above these minor candle body highs, there is higher potential we're going to continue to play in this range here and break back below 1.215, right? So just keep an eye on that. And just as the markets have been fairly slow overnight, gold slowing down, Asian session close in 45 minutes as well. Some of the key fundamental points are obviously still valid about the market optimism, but a lot of it has been priced in, and we can see that investors are sitting on the sidelines just to start off the year, especially as London sessions have been a lot slower over the last couple of weeks. We're going to see more economic data report releases through New York session as shown on your screen. Don't forget, yes, we're here to do analysis and potentially make money, but don't forget your mental reminders to focus on your trading plan. Keep your trading psychology in set. Stay as emotionally neutral as possible and focus on the long-term vision. And yeah, GJ looks like it's going to give that deeper pullback. Gold as well, just messing around here. GBPUSD, similar idea where if it stays below the key level, it's going to give a deeper pullback to retest these support candle body 1 minute low points where we've seen solid reaction and where you've seen GU playing in this range for like an extended period of hours here. Like before this London breakout, this minor London breakout to revisit previous highs, GU was just playing in this range for like the last intraday period, right? So US30 we didn't look at, but you can see equity markets overnight. Again, similar idea where we've just been in that range. Yes, we're still holding. Yes, we're still holding overall bullish market structure, but when you're looking at the FTSE or UK 100, when you're looking at the German DAX, just from an intraday period, you can start to see the exhaustion and ranges we are in. Australian stock market, Dow Jones. So volume and volatility fairly stagnant. And even the headlines, like we're not seeing any crazy Brexit headlines. We're not seeing any crazy coronavirus fear headlines. We're not seeing anything like new to price in that we haven't already heard before over the course of the last year regarding COVID and everything else. I think it's just probably because we're starting a new fiscal year, new quarterly period, everything else as well, and investors are just sitting on the sidelines, especially after cashing out such a long run on the equity buys. But yeah, let's watch what happens. I'm just trying to identify when this minor GJ pullback is coming to an end and we can come back above 142, or if we stay below that and we're going to have a pullback to 141.8. I'm still in a buy bias at either better buys from a 141.8 or the buys above 142. Euro USD, same idea. And like exactly what I was talking about, if we don't break these 1 minute highs, gold messing about, starting to create a little bit of a flat candle body support here, but still need the breakout above 1844. Even if you patiently wait for the breakout above these 1 minute high rejection points, remember our target's 1852. So from a scalper or intraday trade, that's 70 pips up, right? And still maintaining like the bullish potential corrective structure. GJ back to 142. Indexes don't all I would say that's sort of a mixed answer to this question, because there's similar impacting factors, and especially when you have a fundamental catalyst that's impacting the entire world like the pandemic did, or like in 2008 when the financial crash happened, or years and years before that when you had another economic crash. But other than that, when you have, let's just say, regular economic conditions, then the performance of the specific companies and investment in those specific companies and what's going on in those countries is going to have more of a day-to-day impact, and you're not going to see the markets moving on the exact same type of trend. But when you have the entire market, the entire world focusing on only the pandemic, right, then obviously you're going to see similar movement of liquidity through the markets. When you have the mass market fear, you're going to see money get dumped out of the stock markets around the world, and you're going to see it go into your safe haven currencies and safe havens. And obviously, you have the opposite when you have mass market optimism, which we have had ever since we've gone back and had the support of the central banks and more of the vaccine talks and a lot of the fear of COVID priced in, and economies start to open back up. Yes, a lot of countries are still locked down or doing temporary lockdowns, but it's not as bad as like 2020 March when everything was locked down, every job was like shut down, you know what I mean? And everybody was just shocked. That was like the initial market fear that had the strongest impact, like financial impact, and got priced in at that time as well. Nothing has been as high impact since, if that makes sense, to make some sense. Yeah, well, I'm doing an oil analysis for the private channel today, like later today, so don't worry about that. GJ back to 142. What time is it? New 5 minute candle. If this 5 minute remains above 142, you get a break and retest in the 1 minute. This could possibly be that lower wick was just being created and we can continue bullish back up to the highs. But we need a support created above 142 flat. Gold not doing much. Gold still staying below 1844. Euro USD, like I said, to is best to have your risk tight or break even or just stay out of it, as it wasn't breaking these 1 minute highs and we're still ranging. We might get the moves that we're looking for as per our analysis if our buy still stands through New York, because that there is that pattern where if you're going to consolidate through a session and just have the liquidity generated through one session, that there's higher probability of a breakout the following session, but it's not always going to be like that. Any questions, charts, analysis you want to share, just leave it in the chat. Make sure if you guys enjoy these streams and you want them more often, you like, subscribe, you share it around on your social media. Yeah, GJ is, yes, reacting to a 142 flat here. Headlines to the left, not much going on. Some potential more vaccine talks with trials for Novavax. Everything we've already heard. 5 minute candle breaking back below 142. No support created above the key level yet. But we haven't taken any trades tonight. I haven't taken any trades tonight, and I haven't advised anyone else to take any trades tonight. When the markets are clean and everything's looking smooth, I'm the first one to tell you guys, hey, this is looking great. Hey, this is a nice support. Hey, this is great reactions. But when the markets are ranging and we're having a lot of indecision, volatility, and volumes fairly slow, I'm also going to be the first to tell you guys, hey, let's just sit on the sidelines. Let's just sit on our hands. Sometimes the best position is no position, and let's just observe price action, increase our chart hours and experience. You know what I mean? Like when I told you guys to get out, like when I told you guys these gold buys weren't looking good, or the Euro USD buys weren't looking good, or this GJ retest wasn't looking good. I'm just trying to be honest, because like, why force a trade for no reason? You know what I mean? And look, none of them look good. None of them look good yet. Still, Adani Green Energy, today's stock, sell or buy possible. Are you asking? Are you sending us a signal? You said sell or buy. That's not even a good. That's the worst signal I've ever seen. So trading with ICE. Oh yeah, I'll check you guys. Yeah, since markets are slow, markets are ranging. We're not forcing any trades. Um, if you guys want to send any charts while we're watching until Asian session close, you might as well do that. For anybody for trading with ICE, if you want to learn more about my style of trading or like how I observe 1 minute price action, supports, order blocks, all these different concepts, the first thing you should do is go to this YouTube channel itself. I'm gonna make a playlist. This was a good suggestion by a private channel member, but a lot of it got lost ever since I started streaming. Because when people scroll on the videos, you just see all these live streams. But obviously, these live streams are great resources when the markets are trending and clean. We've taken tons of trades. For the people who've been following me since I started streaming like a couple of months ago, how many months ago? 2 months ago now. We've taken tons of trades through these streams using the various concepts, right? But if you scroll past that, before I started streaming these scalping sessions, 1 second here, just got a message. Sorry, okay, before I started streaming these scalping sessions, I have all of these educational webinars. Okay, so you have educational webinars and full top down higher time frame analysis. You have a scalping 101 4-part series. You have like a psychology webinar. You have webinars on fundamental topics. You have webinars on technical topics. You know what I mean? Tons of webinars right here. So for anybody who is new to the stream, the first thing I advise you to do is take your time and watch all of these different webinars on these various different topics. It'll show you exactly how I view the markets fundamentally and technically, uh, how I do analysis. You know what I mean? I also have this capital hungry Twitter feed, which does not post as many headlines as this data terminal to the left. That's just for the private channel members, but it's still a great free resource of headlines. And even websites like Forex Factory, they've been sourcing this Twitter feed. They've been reposting this Twitter. You know what I mean? I think I posted a picture of it, but they've been reposting. You get what I mean? Like Forex Factory, how they have their little news headlines that a lot of retail traders use. They source from the Capital Hungry Twitter red folder. It's not no little newspaper. This like a four fucking newspaper red folder. See that shit? It's not no CNBC. They only got like one little newspaper. BBC, one little newspaper. Fucking these guys, they got a newspaper and a yellow folder. Capital Hungry, four newspapers and this red folder. I don't know what the fuck that means, but it's because we're hype, right? But yeah, what I'm trying to say is this Capital Hungry Twitter in itself, it's already posted like 6,000 headlines. Great resource for news. And then this Capital Hungry free Telegram analysis channel. You could go into this channel and scroll through forever and see past analysis over like the last year and a half. right? And then if you really want more, after observing all of those free resources, going through all of these dozens of webinars, right now the Capital Hungry private channel is open for signups. Like I just am doing a new intake for the new year, so the Capital Hungry private channel is open. I think there's only enough room for about 40 more members, 40 to 50 more members, and then I'm gonna close signups. Hey, let me put this man in timeout. Ganesh, calm down, Ganesh. Fuck sakes, Ganesh. But yeah. In the private channel, we do these types of Zoom sessions like every day. We do higher time frame analysis across different pairs, market updates. You get access to the news terminal. You get access to like key level price alerts, session reminders, other members sharing their analysis and trading, sharing trade ideas, any questions, news headlines, news reminders, session reminders, anything important. All the webinars that get saved. You get access to the 50 plus educational webinars. You get what I'm saying? That's if you want more. Like I have all of those webinars, of course, on the Capital Hungry YouTube channel, but all of these aren't on the YouTube. These are just for the private members, and these are just the educational webinars you get access to if you sign up for the service, and it's month by month. You know what I mean? So yeah, you get a lot of shit. If you want more information about how that works exactly, you can just watch the introduction video on the Capital Hungry. You can just watch the YouTube video, the introduction video on the Capital Hungry channel. So gold right now messing about, doing that deeper pullback like we expected as we stayed below 1844. If we were paying attention, we could have took that scalp sell, but it honestly wasn't really worth it with how gold just was ranging. I didn't want to get caught in a bounce. Still gonna watch the reactions if we come down to 1836 or if we come back above 1844. Just seeing how this 30-minute and hourly is just in a range here. The last 30 did have at least a stronger bearish close, but still in a messier range. GJ, did anybody take that pullback like we called it? And now let's see the reaction to 141.8. Did anybody, you know how we were calling, you know how we were expecting that deeper pullback to GJ on GJ as buyers are exiting their positions? Yes, yeah, Misa. Telegram signal group that closes 500 pips a week. Bro, then you should be a billionaire. What are you doing here? 500 pips a lot. Every week? Every week you guarantee 500 pips? Every single week? You have 100% confidence and 100%. Yo, you should be a millionaire. You should be a billionaire. You should be doing 100. You should be doing 100 lots, 150 lot trade after that, 500 lot trade after that. Yeah, bro. Send us the link, bro. We're gonna fucking chart god. No, I want to see your results, like with these signals. I don't want to see like, what do you mean? Like what with these 500 pips a week? What have you done with it? That's what I want to see. I'm not knocking you. I'm not I'm not asking. I'm not even asking you for a track record. I'm not even roasting you. I'm just saying, like, if you are so confident in this, And if you get 500 pips a week, what did you do with it? Even if it's a small penny lot account, like let's see it. I want to see this 5 weeks worth of 500 pips and like what you got to do with it. I'm not trying to troll you or roast you. The YouTube chat, they're gonna troll you. These guys are ruthless. I'm a nice guy now. I just created some monsters. You know what I mean? These guys are ruthless. I'm nice. Moses, are you talking about GJ? As long as yes, we have, yes, we're seeing buyers exit these previous highs. Yes, we're seeing this pullback happen. But as long as we maintain this minor bullish market structure and above these previous 1 minute lows in 0.800, I still am in an intraday bias on GJ. All right. I'm only looking for continuation sells if we break below 141.8, so we can validate a break below that psychological price level and a break below the structure, which has been respected for an intraday period of about like what 15 hours now, 16 hours, right? So if we can break this structure and show more sellers pressure, then that pullback would make sense. You get what I'm saying? Otherwise, if we still maintain this structure with how bullish GJ is, don't be surprised if GJ just ranges or goes back to revisit these highs and plays around. You get what I'm saying? What's your IG? Send your IG. I don't have an IG anymore, but I can check it out. Yeah, goal's just playing games. Like see how Anton. That's see what I was telling you. Like if you jump in sells and you don't close fast enough, you lose half. You lose all your profit. If you jump in buys and you don't close, like just don't. There's no point. If we took sells and we didn't close right here and you got greedy, it's just right back to entry. It's still holding. It's still creating a support here, like on the intraday time frame. It still didn't break below 36. We just need a cleaner break out of that lower time frame bearish market structure to show us that buyer's pressure, and then yeah, like I'm with you, right? We could see we're rejecting at this previous price point. We didn't even come down to revisit 36 yet, but a lot of price sensitivity and rejection here previously, right? So something to be aware of, but it's just playing games right now. What's your oh, we have some Brexit talks. Oh, it's just about UK trade deals with potentially the US on whiskey. Man, now this shit's gonna be the next fucking headline. UK and US trade deal. Before they were talking about fish between Euro and the US for 5 years. Now these guys gonna be fighting over whiskey for fucking years. Let's see if we get a double bottom and support formed at 141.8. The one thing we can identify in the lower time frame now is that GJ is in this corrective bearish market structure. So the safest buys would be rejection at 141.8 and then coming above 142. Otherwise, if we continue to respect this minor bearish corrective structure and break below 141.8, we can take those safer sells down like we're talking about, all right? Correct, Spoonman. If you want to see more information on that, you can watch those educational webinars I was just talking about. But yeah, that's correct. Gold, you can see gold just reacting at the bearish market structure and previous price sensitivity area still. Chart God. Yeah, I'm not lying. Oh, you're from Canada, Montreal, Canada. Head trader at New Bank Trading. New Bank Canada. What bank is this? Is this an official bank? I've never heard about this one. Is it a new bank? All right, let's see what we got going on here. Why am I so zoomed in? Oh. Hello, darkness, my old friend. Bro, you don't even have any fucking trades here, man. The hell? This is your profile? I can't view your stories because I don't have an account anymore. But as of right now, bro, I'm not liking you so much right now, bro. Shit, man. As of right now, tell the truth. Is this your Bentley? Tell the truth in the chat right now. Is this your Bentley? And if you tell the truth, I'll give you respect. Right now, bro, you know what? I gave you chart god. I didn't roast you. I gave you the benefit. I gave you the benefit of the doubt. I gave you the benefit of the doubt. You know what I mean? But right now, you're coming across as a marketer. Right now, obviously. Come on, man. Obviously, come on, bro. Come on. What do you want me to say? I was trying to defend you. So you have a Tesla and you have a Bentley. These are all yours. It's all yours, eh? Tell the truth, bro. What's this book? How to Win Friends and Influence People. So how to manipulate people into buying your shit? Why are you showing people your tricks? Hide this. Hide this picture, bro. I can't view it. Delete this picture, bro. Why delete this manipulation picture? It's not good. That's not a good look, that one. Everything else, like these are some nice shoes and shit. Okay, what's the new bank? Clear, concise, Forex trading system. Powerful, confluence matrix. We are giving you the edge. New bank. Click to enter. Nice website. I like this. I like this. I like this interaction right here. You guys see this? This is a nice website. Oh, is this a broker? Are you? Is this a broker? Open a live account. Oh, it's not a broker. Damn, $1,000 for the platinum program. Signals. These are the signals. Referral bonuses. It's not. Wow, bro, you guys are email support. So what do you guys what do you do here? Oh, here we go. Who's the is it actually a team or is it just you? Tell the truth. Is it a team or is it just you? Do you have people working with you? I can't even see chart god. Chart god, is it just you or you got a team? Please, can we ignore this guy? Hey, bro, fucking markets are ranging, man. How much? What do you want me to keep talking about? Can you just ignore this guy and make a trade? Are you fucking retarded, Koi 23? I can't just make a trade. How can I make a trade, man? You think I'm a market mover? What do you want me to make a trade? What do you want me to do? The market's ranging, guys. It's coming. It's 18 minutes till Asian session close. Gold went up and down 30 pips. GJ, did you guys take the GJ sells I was telling you? Anybody take the GJ sells from 142 break below to 141.8? Other than that, gold's like messing about. Euro USD. Anybody in Euro USD? That's about it. Like nothing else really going on here. Markets like we've been ranging. What do you want me to tell you to force like squeeze out? You know, there's nothing like sometimes the best trade is no trade. Like there's nothing. Check the page. Check the about page. Oh, I closed it. I lost the link now. I closed it. Fuck it. I just joined. Didn't notice that's not time for trade. Yeah, man. It's Asian session close. It's Asian session close in 17 minutes. New 4 hour candles. Market was ranging over London session. You know what I mean? We did our analysis across the different pairs. We were waiting for our analysis to play out. This analysis that we did, if you guys rewatch this webinar, is still very valid through New York session. Chart God is a banker, broker, and trader. Oh, you guys have a bro. You guys. Oh, you have a partnership with FP Markets. FP Markets doesn't support Canadian clients though, sadly. Yeah, let's take a look at US30. So, as the US dollar overall has still been fundamentally bearish, and every time you see this aggressive dip and a correction, just think about Jerome Powell going burr with the money printer. And every time there's that heavy dip, he says, fuck no, buy that dip. All right. So, overall, as the markets have been primarily optimistic, overall, as you've had this massive amount of liquidity injection into the money markets from the printing of the US dollar, Dow Jones buyers keep printing new highs and pullbacks are not breaking previous lows. You can even see now with these previous intraday highs being broken, this aggressive pullback retested those previous highs with this very strong bullish engulfing candle. And even though liquidity and volume slowing down, we're still respecting lower time frame bullish market structure with potential to revisit these 31.300 previous highs and break into new highs up to 31.5. Oh, they don't. Oh, then FPs probably just doesn't support only Ontario clients then, because after Vantage left, after Vantage dipped all of Canada, I was gonna check out FP because it looked like they had good history and spreads and everything, but they didn't. I guess there was no option for Ontario. So overall, still a bullish bias on DJ as long as we maintain at 31,150 or even a retest of 31K bullish bias. I would only be looking for sells below 30.800, or if we have any mass market fear come into the scene. Even with like Trump's impeachment stuff, even with like the Capitol riots, even with all the negativity that's happened and COVID cases still spiking, the confident investors don't care, and it's not shaking buyers out of the stock market yet. So we can't deny the bullish price action and market structure still, as well as higher time frame key levels being used as support points for buyers. And the only thing is, I don't necessarily like buying at previous highs. That's the only thing. I hate selling at lows and buying at highs. I would like to wait for a pullback. And if we could get a pullback to retest 31K flat again, that would be ideal. Asian session close coming up in 13 minutes. New 4 hour candles as well. This guy said he sent all of you the signal group for free and it's worth 300 USD. Yeah, bro. I gave you the benefit of the doubt and you came in with the marketer profile. So, you know what I mean? You know what I mean? You gotta you have to provide value. Like if you can tell people to go check out your signals, and your signals could be great, you could be a millionaire, but if you don't provide value, nobody's gonna give a fuck for an extended period of time. You're just gonna keep cycling people in and out. You know what I mean? This is, and even when I had social media, when I had IG, like I was never posting my car. I was never posting like this flashy stuff because the field we are in of trading, I was trying to post information about trading, right? Trying to post charts, trying to post analysis. And this gave off heavy marketer vibes. So you know what I mean? Look at your social media feed and tell me what it does for anyone. And then, not to be a dick, look at this social media feed and tell me what it could do for somebody. You get what I'm saying? You know what I'm saying? Yes, bro. These are beautiful pictures. Fucking sick cars. Nice fucking lighting. Great photography. But what is this doing for anybody? What's it doing for you? What's it doing for them? What's it really doing? You even said the Bentley's not even yours. So what is the point of this? What's the for? Are you just trying to manipulate people? Are you trying to sell something? Are you trying to portray a lifestyle, an image for your own self-esteem purposes? Does posting this stuff make you happy? I'm just asking. I drive an Audi S4. It's nothing crazy. Right? It's like, even if you go to someone, let's go to Q Banks. Isn't Q Banks here? Q Banks is known as the Wall Street Academy trader, right? Whatever, all the shit. What is any look at, do you see these videos? What does Q Banks or these marketers, what do they do for anybody for free? What value are they providing? What are they giving back to the trading community? You have a day in the life of Q Banks. You have 2 Lamborghinis, celebrating my 30th birthday, one-on-one with Q Banks, flying my private jet. This guy's a fucking dick, yo. My RS5 Sportback had a full makeover, searching for the perfect Ferrari. My 170K Forex trade breakdown after the fact, taking a delivery of my new car, trader tech review, bossing up, Q Banks Instagram. You get what I'm saying? I'm not trying to be a dick. If you guys are traders, or if you guys are trying to learn about the markets, or if you guys are involved in the financial markets or trying to learn about trading overall, and if I have a paid service, what's in that paid service if I have all of this for free? If not a single marketer you know can even provide any free value, because they have to bear hug the little bit of content they have. Imagine what's in their paid course, probably just some generic shit, right? But if I can provide all of this over months, over different pairs, different concepts, fundamentals, technical, psychology, all related to economics, all related to the financial market, all related to trading, if I can do this 4-hour webinars, 3-hour webinars, 1-hour webinars, so imagine what is in the Capital Hungry private channel then. You get what I'm saying? Yeah, Q Banks did. Yeah, he did. But yeah, not much going on still overnight. We're coming back. See what I was talking about here? How we're having a strong initial reaction off 0.800, but we can identify this corrective lower time frame bearish market structure. And even with this pullback in reaction, we're reacting here still. So we need to see more signs of exhaustion and the support at 141.8. and then a break out of this corrective structure to take a 20 pip scalp squeeze and ride buys up higher. Gold. What's gold doing? Not much. Don't forget, new 4-hour candles in 6 minutes. An hourly candle closes, an Asian session close. No, I have a S4, not a RS4. I wish I had the RS, man. I'm not that rich. I have a 2017 S4, just the S4. I want a my dream car is a brand new RS7. That'd be a sick car. I wish I had a RS4. That'd be nice. RS7, Audi RS7. That would be like my like a brand new the. I'm not talking about like. Have you guys seen the brand new 2020 and the 2021 RS7s where they redid the body a bit more? They made it more like modern. So nice, man. Crazy. Yeah, the new R7, crazy, man. It's fucking nuts. GJ back to 142. Reacting towards the key level here. Yeah, I've had like I've had my Japanese like Toyota when I had a Lexus like IS250. I had I had an older BEM, but out of all the cars, the Audis have the best handling and drive. Like out of all the cars I've had, just the steering alone on Audi's so crazy. Yeah, Toyotas are nice, super reliable, man. My Lexus, I ran that shit down. Yeah, GJ buys only above 142. Otherwise, if we reject here again, we're gonna see scalp sells again all the way back down to 141.800. Okay. Gold, we're still waiting for the break above 1844, but the one thing we're keeping in mind is in 4 minutes, we have the Asian markets closing, new 4-hour candles as well, and coming towards pre-New York hours. Yeah, BMWs are nice, but I don't know if you guys have driven both. It's not like you have to drive like a brand new BMW or brand new Audi. The drives are similar of how they're built, of like how Audis are built throughout the lines and how like Beamers are built. And Beamers are just heavier. They're like stiffer. Audi's just so smooth, in my opinion. Hellcat, that's a beast. One sec, guys. I'm just gonna go to the washroom quickly before Asian session close. I want to see how these hourly candles and 4-hour candles close and what it looking like going to New York. Yeah, Japan markets closed earlier, but I'm talking about overall Asian markets like China, because China opens at like 9 p.m., 9:30 p.m. Eastern, hour and a half after Japan, right? So they close like around 5 a.m. Korea closes first, then Japan, then China, like in the same order they open, obviously. If it wasn't towards the end of the stream, I would go into like algorithm trading and my perspective on it, but it's a lot to talk about. GJ, GJ, we have, I think, in my opinion, on GJ with the new 4 hour candle, we have higher potential. This 4 hour candle, you can see it just opened up and it hasn't created much of a lower wick yet. So I think we have higher potential that this candle can create a lower wick at 0.800 first, then would turn bullish, which would show us more buyers momentum. Otherwise, if it pushes up first and rejects 0.200 and then comes back below 140, 142 flat, I'm going to be looking for more sells on GJ as we're rejecting these previous highs and have higher potential to play in this intraday range down to 141.5. But yeah, just new 4 hour candles opening up here. We're retesting 142 on the dot on this new 4 hour candle. Gold, new 4 hour candle looks like it's going to squeeze down first. I haven't done any top down analysis on the UK 100, but I have recently uploaded just a couple of days ago a full top down analysis on GJ and gold. If you want to check those out, and you can also rewatch these previous live streams as well as educational webinars. Don't forget to capital. Don't fucking man, I'm getting tired. Don't forget to follow the Capital Hungry Telegram channel and join that. Link right here, t.me/monsterfinancefx. The Capital Hungry Twitter for all those headlines. And if you want to join the private channel, if you want to be a part of these Zoom sessions more often, get access to everything else like those 50 plus educational webinars, the higher time frame analysis, the key level price alerts, the newsroom, the trade room, the trading community, the session reminders, the weekly recaps, the market updates, then you can join the private channel. But we only have about 40 to 50 spots left. And once those spots are filled, I close the signups just because I don't like to have too many members in the group, in the private group. Otherwise, it can become too distracting and take away from the productive environment. Yeah, it is, Riley. It is possible for that. Banks are always hiring mathematicians, scientists, and people who are doing data analysis, data scientists who are doing analysis on the markets to try to find an edge. But Asian session close. Thank you guys for your support and coming to watch the stream. We're going to be coming to an end here. Markets were ranging overnight, not too much to talk about. I didn't take any trades. I don't really think anybody else took any trades. There wasn't really anything to execute on primarily. Hopefully next week I'll see you guys Tuesday and Thursday next week. Hopefully markets are a bit more volume rich through London session, higher volatility.